What if the money in your pocket isn't really money at all? What if the dollars, rupees, euros, and yen, the numbers glowing in your bank account, are nothing more than manufactured illusions? For centuries, civilizations fought wars for gold, land, and power. But in the last 100 years, the real war, the quiet, invisible one, has been over something far more abstract and far more dangerous. This is the story of how real money, tangible, finite, and honest, was quietly replaced by manufactured currency, a system built on debt, deception, and digital promises, and how, without firing a single shot, the world's financial elite won control over nations, economies, and even your freedom. For most of human history, money meant something real. In ancient Lydia, around 600 BC, the first coins were struck, made of electrum, a natural mix of gold and silver. The logic was simple. Value represented value. The coin in your hand was wealth itself, not a symbol of it. Centuries later, Rome refined this system. Their empire's power was built on sound money. Gold denarii and silver coins held consistent value until greed crept in. Roman emperors began clipping coins, reducing precious metal content but keeping face value. The result: inflation, chaos, and collapse. Sound familiar? The lesson was clear even then. Once rulers learn they can create money without effort, they will, until the system eats itself. Fast forward to the Middle Ages. Gold and silver remained the backbone of trade, anchoring empires from Venice to the Ottoman world. But gold had a problem. It was heavy, hard to move, easy to steal. And so, the next transformation began. By the 1600s, goldsmiths in England offered to store people's gold for safekeeping, issuing paper receipts in return. Those receipts, backed by real gold, became convenient for trade. Eventually, people realized, why move gold at all? Let's just trade the receipts. And just like that, representative money was born. Paper that promised gold on demand. But behind closed doors, the goldsmiths noticed something extraordinary. Not everyone came to claim their gold at once. So they began lending out more paper than the gold they actually had. The more paper they lent, the more interest they earned from money that didn't really exist. This practice evolved into what we now call fractional reserve banking. Soon, kings and governments joined in. Wars could now be financed with paper promises rather than real reserves. The ability to print money, literally or digitally, had become a weapon of power. In 1694, the Bank of England was founded, not as a bank for the people, but as a bank to the crown. It was a private institution with one mission: lend money to the government and charge interest. From this point forward, national debt became the foundation of currency. Money was no longer created by productivity, it was created by borrowing. This model spread. France, the Netherlands, and eventually the United States all followed. By 1913, in a private meeting on Jekyll Island, a group of the world's most powerful bankers drafted the blueprint for the Federal Reserve System. The Fed wasn't truly federal, and it held no reserves in the traditional sense. It was, and still is, a consortium of private banks with the legal power to create money from nothing and lend it to the government at interest. This was the moment real money died and manufactured currency took over. For a time, the illusion held together. The US dollar was backed by gold, and because other countries tied their currencies to the dollar, global faith remained strong. The cost of 2 world wars, the Great Depression, and massive government expansion pushed the system to its limits. By 1971, President Richard Nixon faced a crisis. Foreign nations were demanding gold in exchange for their dollars, and the US couldn't deliver, so he closed the gold window. From that moment, the dollar was backed by nothing. It was no longer a claim on gold, it was a claim on belief. We entered the era of fiat currency, money by decree, money that exists because a government says it does, and the world never looked back. Once money was no longer tied to something real, there was no limit to how much could be created. Every new dollar, yen, or euro in circulation was born as debt. When you take a loan, money is created. When you pay it back, it disappears. It's an infinite loop, but one designed to trap you inside it. Governments borrow, corporations borrow, people borrow, and yet, the total debt can never be repaid, because repaying it would destroy the very money supply. That's the paradox. The global economy depends on debt to exist today. Total world debt has surpassed $350 trillion, more than 4 times global GDP. Central banks keep interest rates artificially low to sustain the illusion, but every solution only deepens the addiction. Printing money to fix debt is like drinking poison to cure thirst. In the 21st century, the war between real and manufactured money has entered a new phase. Cash, physical, anonymous, real, is disappearing. In its place, digital currency is rising. Central bank digital currencies, or CBDCs, promise efficiency, but at a price: total surveillance, every transaction traceable, every dollar programmable in the wrong hands. This isn't money, it's control. And while citizens are distracted by inflation, markets, and politics, a quiet consolidation is underway. The same institutions that created money from nothing now aim to control how it's spent, where, and by whom. We've gone from gold coins to paper notes, to digital entries that can vanish with a keystroke. Manufactured currency has become manufactured reality. Look closely, and you'll see the cycle repeating. Rome debased its coins, it fell. France printed assignats during the revolution, it collapsed. Weimar Germany printed marks to pay its debt, it hyperinflated. Now, the world prints digital dollars at a rate history has never seen. The pattern is always the same. Debasement gives inflation, gives collapse, gives reset. The question is not if this system will fail, but when. Real money represents value. Manufactured currency represents debt. Understand this difference, and you'll see through the illusion. Every time a government stimulates the economy with printed money, it's borrowing your future prosperity. Inflation isn't random, it's a quiet tax. The cycle of currency collapse is as old as civilization itself, but those who understand it, who prepare, who diversify, who study, survive it. Money is no longer what it seems. It's code, credit, and confidence, until it's not. When the next reset comes, and it will come, ask yourself, will you be holding something real or something manufactured? Because history doesn't just repeat, it rhymes with interest. If you found this story eye-opening, share it. Subscribe for more deep dives into the hidden systems shaping our world. And remember, the war between real money and manufactured currency is still being fought. Which side are you on? Music fades, screen darkens, title reappears. Asterisk: the secret war between real money and manufactured currency.